My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people to make friends. I'm just trying to make you some money. My job is not just to entertain, it's to educate. It's to teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Remember a year ago when everybody was obsessed with the alphabet? We couldn't decide. Let's see, are we looking at an L-shaped recovery or maybe it's a U, maybe it's a W, maybe it's a V. But it turns out the letter we landed on doesn't exist unless you have real bad handwriting like I do. After still one more day, where much of tech sold off and the rest of the market rallied, Dow gained 318 points, S&P advancing 0.82%, at least NASDAQ gained something, 0.37%. It's becoming clear that the reality is much, much better than almost any business person expected. Now, a year ago, it felt like the end of the world, right? I mean, like Stephen King's The Stand. There was this novel virus, meaning we had no natural immunity, so we were understandably terrified. For me, it was the morgue trucks. They seemed to be everywhere. Right about this time in the Northeast, you probably knew someone who got COVID. You knew someone who died from it. Because I'm naturally paranoid, I started freaking out about the pandemic in early February, and I spent a lot of time warning everyone. But by the time May rolled around, I'd become quite confident that our drug companies would be able to whip up something to stop it, either a drug or a vaccine. While we didn't know when, I'd spoken to enough scientists as part of my due diligence for this show to know it was only a matter of time. They were all willing to talk to you. No one was calling them. Of course, I was uniformly lambasted for my view, including a New York Times article, totally gratuitous, that compared me to Otter from Animal House, that idiot, you know, in the mock courtroom scene. They couldn't believe that I was sincerely telling people to bet on American ingenuity. They filleted me. Well, it turns out I'm a tougher fish to eat than you think. Hence the letters, okay? Now, the letters that spelled out the potential trajectory of the economy are listed here. Things seemed pretty darn ugly a year ago, so a lot of people were betting on an L. Just a huge decline, followed by a flat line. Some thought we might have a W. Yeah, down, then up, then down again before a later recovery a couple years out. The more optimistic source were looking for a U. Yes, a U-shaped recovery with the bottom part lasting maybe, 10, 20 months before the turn. Finally, there were people, clowns, cockeyed optimists like me, who said we're going to have a V-shaped recovery because we believed in science. I've been ridiculed so much, I think I really give a darn at this point, especially when you're right. By the time last May came along, the L had already been taken off the table. Why? Treasury Secretary Mnuchin and House Speaker Nancy Pelosi agreed to an emergency rescue package for the economy, and the Fed chief recognized the gravity of the situation. You had money being showered on the airlines, all of which likely would have otherwise gone belly up. You had special unemployment benefits, and yet a novel thing called the Paycheck Protection Plan that put money in the hands of small businesses, allowing many of them to stay alive through the pandemic. Still, 150,000 restaurants failed. Once that money got into people's pockets, it started circulating. Some chose to buy things to fix up their houses at essential stores that stayed open. Think Home Depot, Lowe's. Others bought stocks, chiefly younger people who were intrigued by the notion of investing, especially when the chips were down and they like Robinhood. Maybe most important, at least, savings. And for a lot of that savings, it was the stock market. Well, because the Fed backed up the bonds of companies that were hurting, so most of the bankruptcies were confined to small, medium-sized businesses. Terrible for them, but irrelevant to the stock market. Instead of the L, people started speculating again about the W, an economy boosted by the stimulus that could expand until the money ran out, at which point we'd slump right back, regardless of which presidential candidate won the election. However, once the summer got rolling, new infections went down, and we thought we could see our way out of the pandemic. At the same time, we had an exodus away from cities and a work-from-home renaissance that seemed to accelerate each week, backed by the wholesale spending from people who needed to change their entire lifestyle. Returning to work was not an option, but there was so much money sloshed around and so much hope that things would get better that, you know what? The narrative became the U-shaped recovery. Sure, there were still people getting sick, but for a while over the summer, lots of states went back to business as usual. And then the second wave hit. It made us feel like the U pipe dream. Businesses began hunkering down again. We had tons of layoffs. Whole companies like the automakers and the aerospace place, they just shut down. No more cars. If you weren't in the work-from-home stocks, well, your portfolio went nowhere. Otherwise, you were zooming. By November, though, the whole character of the market changed again when we started hearing about a vaccine that worked. The Pfizer vaccine. It's a charm. Week later, we got equally great numbers from some outfit that I had interviewed twice called Moderna that no one even cared. I had them on. It was like, well, I guess that was some segment that nobody looked at. But the virus was still raging. Third wave hitting us over the winter. Lots of people traveled for Thanksgiving, Christmas. Curiously, though, that new wave wasn't devastating to the stock market. The confusion and chaos, not to mention the stop-start nature of vaccine distribution, at times made us feel like the recovery was in jeopardy, especially with the stimulus money running out. There it goes. Put the W back on the table right around election time. Not a lot of new orders coming in except for housing because the urban X's. Keep those. Will you please keep those automobile plants closed? Will you? I mean, I don't want to make any autos. Then an amazing thing happened. Once Biden was sworn in, the vaccination program started going a lot more smoothly, and it didn't turn into a culture war thing like masks had. We quickly realized a simple truth. Science was not only winning, science, so ridiculed a year ago, had won. Just one problem. A big W for science meant the economy would have a big V, meaning the least likely scenario was coming true. Most businesses just weren't prepared for it. The automakers in particular didn't have enough chips. They had slashed orders during the dark days of 2020. Home builders had to put up so many houses that they bid up all the commodities and appliances going to home. A freak winter storm out of nowhere took all of our plastic capacity. Bizarre bottlenecks in California ports jacked up the cost of importing goods. Why don't they just go to Baltimore or something? Oil bottomed and surged higher because of a new president who's a lot less enthusiastic about fossil fuels. Travel came back to life. Turns out that airplanes aren't dangerous. But then it was clear that we didn't have an L. We didn't have a W. We didn't have a U. We didn't even have a V. We had some new darn animal. We had a super V with the right side almost straight up, taking us well above where we were before the pandemic. And that is the situation now, right here. We got an economy plagued by shortages because we had the wrong letters all along. Nobody saw this kind of strength coming. Plus, many money managers own the wrong stocks. So even as Wall Street kept printing new software and server stocks and cybersecurity stocks and SPACs, money shifted into the scarce industrials and natural resource plays. Most of them have been buying back stock for years, and there's just not a lot of supply. The bottom line, the implications of the Super V are finally being realized, and the gains are coming fast and furious, but only for a very small part of the market where there's no new stock being created, just buybacks retiring old shares. The scarcity creates tremendous value, at least for those of you who know the alphabet when you see it.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.